It is 11:07 a.m. Pacific Daylight Time. It is the 17th day of April 2026, and this is episode 1302 of Bitcoin and Strait of Hormuz has been opened. Oil crashes. Bitcoin goes to 78,000. Will it last? See, we've been down this road before. It's like, how many times are we going to perform this exercise with Iran? It's not like we haven't been here before. We've been here like at least twice. Oh yeah, we'll give up our nuclear aspirations. Yeah, no. So the question really is, how long does this hold? I actually don't think it will. I think a year from now, we're going to find ourselves bitching and moaning about Iran and nuclear weapons all over again. But you know, as long as markets can be manipulated by people saying things and shorts being taken and longs being given and all this crap, you see this, I wonder, is it possible that now all rhetoric around war or any kind of military action anywhere in the world is more about people having longs and shorts on parts of the market that will be affected more than what they actually say they want to achieve with the military action itself? Yeah, I don't trust anybody anymore. It's kind of sucks. Well, it's not that I trust, there are a lot of people I do trust. I just don't trust anybody in government. And that's where we're starting today. CoinDesk, Stephen Alfer, Bitcoin rises past 77,000, aiming at major breakout as oil plunges on Iran cooldown. The price of Bitcoin is again pushed above 77 grand, along with a 10% plunge in the price of crude oil in an apparent reopening, it's apparent reopening of the Straits of Hormuz. Quote the passage, "For all commercial vessels through the Strait of Hormuz is declared completely open for the remaining period of the ceasefire." Ladies and gentlemen, that's 1 week. That's 1 week. Said Iranian Foreign Minister Saeed Abbas Araghchi in an X posting. President Trump quickly responded on Truth Social, thanking Iran for the full reopening. Oh, thank you. The news sent the price of West Texas Intermediate crude down nearly 10% to $85.90 on a barrel, about its lowest price since shortly after the outbreak of the war in early March. Alongside, Bitcoin has risen to over 77,000, up 3 over the past 24 hours. U.S. stock indice futures are higher by about 1% across the board. Bitcoin was trading around, and then they get into the numbers. Let's see if there's anything more. Separately, Axios reported that the U.S. and Iran are negotiating over a 3-page plan to end hostilities. Among the discussion points, the United States releasing $20 billion in frozen Iranian funds in return for that country giving up its stockpile of enriched uranium. And if you believe that, I believe they're talking about it. I in a very matter-of-fact way, I think we will unfreeze their $20 billion. And I think that Iran will give over enriched uranium. Will they give it all? Do we know how much they have? Are we sure? We've given Iran money before. I remember airlifts of pallets of $100 bills going to Iran, and none of it was used for what was Obama wanted. It was supposed to go to the people of Iran, fix the streets, get some street lights. None of that shit was done. Instead, they built up their military. And now here we are again. But in this time, it's like, well, we'll give you back your own money, and you give us the uranium, and we'll all go to a party together and drink beer. Like, that's going to happen. No, it's not going to happen. We're going to be right back here again. I don't know when exactly. I think it'll be shorter than anybody actually suspects. But that's the thing. How many times do we have to perform this exercise before everybody figures out that Iran has absolutely no intention of giving up their nuclear program? It's never going to happen. I don't think they should have one. I'm not making the argument that the mullahs of Iran should, have a little red button that they can push themselves. That is not my argument. I'm not going to make the argument that we need to bomb them into the Stone Age, because the only people that really, really get hurt through all of this on either side of the possibilities here is the Iranian people, and they're fine people. The Persians are great, man. Americans are great. It's our government that sucks. The UK is great. It's the government that sucks. The Chinese are fine people. The government sucks ass. Pick a country. The citizenry is fine because they want to do what people do. They want to fall in love and get married and have kids and go fishing or something else. It's like, it's not the people, and we're always the ones that get caught in the middle of all this hoopla. But if you actually believe that it's over, it's not over. It may be over for a while. And we still got to get past the rest of this ceasefire, which is about a week. We got about a week on this ceasefire. Hormuz is completely open, according to the Iranians. We'll see. I don't believe any of this, though. And I don't think anybody should be rah-rahing right at this point. Just be on the lookout for chicanery coming. Next up, Citi says mixing Bitcoin with gold can boost your portfolio performance. So Citigroup is actually saying, hey, if you need some Bitcoin too. And Micah Zimmerman from Bitcoin Magazine is going to point out the particulars of that statement. Citi analysts say holding both gold and Bitcoin can improve portfolio performance compared with traditional bond and equity mixes. In a new report cited by CNBC, analyst Alex Saunders said a 5% allocation to gold enhances portfolio efficiency, while splitting that exposure between gold and Bitcoin produces even stronger results. The analysis found the mixed allocation improves returns in bond bull markets and provides resilience during bear steepening cycles tied to fiscal concerns and raising inflation risk. Citi noted then that Bitcoin often performs better than gold when bond markets weaken, highlighting recent gains amid geopolitical and equity market stress over the past 2 months. Bitcoin has risen 9%, while spot gold declined 4%. Saunders said that the tactical appeal of a combined allocation lies in balancing the relative popularity of gold with Bitcoin's growth characteristics. Bitcoin's move above 77,000 reflects more than a technical breakout. It signals a shift in how markets are valuing the asset amid rising geopolitical tension. After rebounding from a February low near 60,000, Bitcoin has climbed roughly 23%, holding firm even as traditional markets face pressure. Traders now view the $75,000 to $76,000 range as a critical resistance zone, with a breakout potentially opening a path towards 80,000. Failure could send the price back down toward the low 70s or even below. Underneath the surface, derivatives data suggest a market position for a potential squeeze. Funding rates on perpetual futures have remained negative for over 6 weeks, indicating persistent bearish positioning despite rising prices. Historically, this combination of negative funding, rising open interest, and price stability has preceded upward breakouts as short sellers are forced to cover. At the same time, the narrative around Bitcoin is evolving because it's no longer seen purely as digital gold hedge or a high-risk tech proxy. Bitcoin is increasingly being priced as a geopolitical instrument. The Iran conflict has accelerated that shift, with Bitcoin outperforming both equities and gold during this period. This divergence challenges long-held assumptions about its correlation to broader risk markets. The most striking development is Bitcoin's emerging role in real-world settlement. Iran's reported move to require Bitcoin-based tolls for oil shipments through the Strait of Hormuz introduces a tangible use case for the asset in global trade. And this transforms Bitcoin from a speculative asset into a neutral settlement rail operating outside traditional financial infrastructure. So Citigroup is basically saying you're going to want to get a hold of gold, and you're also going to want to allocate to Bitcoin because one is going to be a hedge against the other. Now that's what Citigroup is saying, and that's just the old world talking, right? That's literally the old ideals coming home to roost like chickens. And so what we know about it, though, is this last part that Micah was writing about, is the rising influence of Bitcoin in geopolitical situations. And Iran's it is not a terrible test bed for looking at Bitcoin in a completely different light, which I think the whole Iranian conflict has kind of shown that, not just because of the price performance against bonds and gold and all that during this entire time, but the narrative that Bitcoin was going to be used by Iran to take tolls with for ships that wanted to pass the Strait of Hormuz. Now, all that is like now kind of in the wind to twist, yet we still don't know what's going to happen with Hormuz. We still got a week on this whole thing. And God only knows what happens during this week, and God really doesn't even know what happens the week after that. So, whatever. But the narrative was enforced and reinforced again that Iran was going to take Bitcoin for tolls. And it doesn't matter if I'm calling bullshit on that, because I don't know. All I know is that the guy from the Energy Union in Iran said that. I still have yet to see, quote, official governmental speech or anything like that, verbiage or any kind of writing that corroborates that. Right now, as far as I know, it was really only the union guy. And it's not like he doesn't have any power, but he's not a mullah. He's not one of the guys, man. He's not one of the top. He's not the big cheese. So I kind of have to take what he says with a grain of salt. Yet, worldwide, global media kept saying the same thing. That Iran was going to take Bitcoin for passage through the Strait of Hormuz in the form of a toll. And here's the reasons why, and it's like they gave the reasons why. Well, it's like it's undiscoverable, it's unconfiscatable, nobody knows what the hell's going on, and you can't see the transaction. You can see the transaction, but how are you going to like work it back to Iran and the shipping company? I mean, it's really the levels of obfuscation are really high when it comes to Bitcoin. And that narrative being said again and again and again and again, regardless of whether or not Iran was or was not really going to do that, is really the story here. Because that story kept getting put into the ears of people that are high net worth individuals, people that represent high net worth individuals, bankers, hedge fund managers. It just was on and on and on. And the first couple of days after that dude said that, I was calling straight up bullshit. But it doesn't matter if it's actually bullshit or not. It's the story that matters. And the story is repeated to this day in global media. And that's one of the reasons why now people are looking at Bitcoin as, well, shit. From a geopolitical standpoint, this thing actually makes a lot of sense because they were forced to look at it. And then a lot of those people actually said, well, how exactly does it work? And then the people that make it down enough deep into the rabbit hole are going, oh, shit. You might want to get some if it catches on. Just saying. Next up, the U.S. government moved $606,000 worth of Bitcoin linked to the 2016 Bitfinex hack to Coinbase. $606,000 is not a lot of money, guys. But it's movement of United States government coin to Coinbase. So the potential for FUD is extreme. So we might as well figure out what's really happening here. Omkar Godbol is going to tell us from CoinDesk. These $606,000 worth of Bitcoin moved to Coinbase Prime aren't just any coins. On-chain data suggests the transferred 8 Bitcoin. I repeat, 8, not 80, not 800, not 8 million, whatever. It's 8 Bitcoin are linked to Ilya Lichtenstein, the man behind the decade-old hack of the OG Bitcoin exchange Bitfinex, according to data tracked by Arkham. Transfers to the exchanges are often interpreted as a sign of potential selling pressure. However, that is not always the case and could also reflect routine wallet movements, custody changes, or some sort of non-selling activity. The Bitcoin tied to the hack, which saw Lichtenstein, I love this name, Lichtenstein, walk away with 120,000 Bitcoin, has a court-mandated destination, and it ain't the U.S. Treasury. In early 2025, federal proceedings solidified the in-kind restitution of the seized assets to Bitfinex, requiring the government to return the coins rather than liquidate them independently. Bitfinex intends to use the returned funds to fully redeem all outstanding recovery right tokens, which were digital claims issued to customers who suffered losses in the hack, and to allocate at least 80% of the remaining net proceeds to repurchase and burn its UNUS SED Leo tokens. In August of 2016, Lichtenstein hacked into Bitfinex and fraudulently authorized more than 2,000 transactions, transferring 120,000 Bitcoin to a wallet under his control. At the time, the exploit was worth $72 million. As of today, it's worth $9 billion. What followed were years of sophisticated money laundering via crypto mixers and darknets and chain hopping between coins, as well as the purchase of straight-up gold. Finally, in 2022, investigators caught up and seized a portion of the stolen Bitcoin, then worth $3.6 billion. In 2024, Lichtenstein was sentenced to 60 months in federal prison and was released in January 2026 under the First Step Act, thanking President Donald Trump on X. The stolen coins, however, remained in government custody, and the U.S. said last year that its holdings of seized Bitcoin would form part of a national strategic Bitcoin reserve. As of writing, the government holds Bitcoin valued at about $24.5 billion, either at roughly $146 million and several, Ether at roughly $146 million and several other cryptocurrencies. What's not clear is what's going on with this 8BTC. Is it a test transaction from those coins going over to Coinbase Prime? And why is it going to Coinbase Prime? Why isn't it not going to Bitfinex if it's part of the Bitfinex hack? Because we've always said there's only really 2 routes the United States government can go. Either give the coins back to Bitfinex because it is their stolen property. It was stolen from Bitfinex. It's their property. It should either go back to Bitfinex or they should get burned. There's real. I mean, I know the third option clearly is that the United States government keeps it as part of the Bitcoin reserve, but I don't know, man. But it doesn't matter. Why 8BTC? What the hell is Bitfinex going to do with $606,000 when they have, the potential of gaining damn near $9 billion if the United States government would just give them the fucking coins back? How come they can't just give it back to Bitfinex? It's their coins. See, there's some shady shit going on here. That's all I can say about it right now. I'm just, you know what? I'm just going to get off of that right now. I can't do it. I'm going to get myself all worked up. So now, not that I'm not going to get worked up about this one. Circle, my favorite gentleman, Jeremy Allaire's company, has been hit with a class action lawsuit over the $285 million drift protocol hack. Nobody can get their numbers straight. We have no idea how many millions of dollars was hacked from drift at this point. It's anywhere from 100 to $400 million. And yesterday I said something like 185. Now it's 285. Who knows what the hell's going on? But Circle's been hit with a class action lawsuit. Stephen Graves out of Decrypt. USDC issuer Circle's been hit with a class action lawsuit from drift protocol investors who lost money during the April 1st exploit and saw $285 million drained from the Solana DeFi platform. The suit was filed on April the 14th, and it accuses Circle Internet Financial, the company, of failing to freeze stolen funds during the exploit. The lawsuit centers on an 8-hour window during which the attackers moved $232 million of USDC from Solana to Ethereum using cross-chain transfer protocols. The hackers then had exploited drift protocol through pre-signed administrative transfers using durable nonces. Drift protocol then subsequently linked North Korean state-affiliated hackers to the attack. The incident prompted sharp criticism of Circle from within the crypto community, with blockchain investigator Zach XBT accusing the firm of having been asleep during the drift exploit. And he added, quote, "Why should crypto businesses continue to build on Circle when a project with 9-figure total value locked could not get support during a major incident?" End quote. Circle maintains it acted appropriately. Quote, "Circle is a regulated company that complies with sanctions, law enforcement orders, and court-mandated requirements," said a company spokesperson. And then earlier this week, CEO Jeremy Allaire warned that unilateral freezing decisions outside established legal processes could create, quote, "a significant moral quandary," end quote. Chief Strategy Officer Dante Disparte reinforced that position in a blog, stating that, quote, "When Circle freezes USDC, it is not because we have decided unilaterally or arbitrarily that someone's assets should be taken from them. It's because the law requires us to act," end quote. While Circle defended the position, Drift Protocol secured recovery commitments of up to $127.5 million from Tether and $20 million from other partners on Thursday. Tether's CEO Paolo Ardoino positioned his firm as more responsive, stating that, quote, "Tether's role in the digital assets ecosystem is to provide a platform for individuals and institutions alike that is ready to step forward and help the industry in the moment of darkness," end quote. The legal action arrives amid broader concerns about stablecoin issuers' responsibilities in combating illicit finance. TRM Labs data shows around $141 billion in stablecoin transactions just last year were linked to illicit activity, including sanctions evasion and money laundering. Zach XBT documented approximately $420 million in suspicious USDC flows since 2022, and all of those went unblocked. Circle reported soaring USD circulation and transaction volumes in its Q4 2025 report, with Jeremy Allaire claiming the firm would grow in tandem with the artificial intelligence industry and, quote, "drive the greatest acceleration of economic activity that we've ever seen in human history," end quote. And that's the end of the article. And it's really light on facts about the actual class action lawsuit. So I guess it's just been filed, so we probably don't, there's probably just not a lot of information as to when it goes to trial, how much the plaintiffs are asking for, who the plaintiffs are, all that kind of stuff. But it is a class action lawsuit. Now, here's the problem. What happens if Circle loses that? What happens if Circle loses that court case? That's going to set a precedent to all stablecoin issuers to, you better go ahead and freeze. Maybe not even wait until the law enforcement gets involved. Just go ahead and freeze it. This is why I Bitcoin, because I don't have to worry about this. I don't have to worry about the outcome of a pending lawsuit that may not even be heard in front of a judge for 2 years. I don't have to wait. I know nobody can mess with my Bitcoin. And the reason I know that is because I hold my own private keys. If I held my Bitcoin on Coinbase or something like that, then I would be way more nervous. But since I hold my private keys, there's not a court case in the land that can really affect whether or not my Bitcoin gets frozen or not. My only issue with whether or not my Bitcoin gets frozen is BIP 361, but I'm not going to say anything about that right now because it is time to run the numbers. CNBC, futures and commodities and energy getting beat like a midget in a female mud wrestling contest. Whoop-dee-doo. Brent North Sea down 9.6% to $89.83 a barrel. May contracts on West Texas Intermediate down 12 points to 83.31 a barrel. Natural gas acting as a hedge, but probably not making anybody happy by doing it. 1.21% to the upside to $2.67 per thousand cubic feet. Gasoline down 5.6% to just under $3 a gallon. And Merbon crude down 11.1 points. That's a row of sticks to $90.38. Conversely, metals are having a spot-on day. Palladium up 0.5 point, gold up 1.6 to 48.86 and 9 dimes. Platinum is up 1 point, silver is up 4 1/3 to 82.14, and copper is up 0.3%. Ag is mostly in the red. Biggest winner today is rough rice, 2.72% to the upside. Biggest loser is, of course, chocolate, 4.5% to the downside. Live cattle down 0.19%. Lean hogs down almost a point. Feeder cattle down also almost a point. The S&P, the NASDAQ are both in all-time high territory. S&P is up 1 1/4 to 7162. NASDAQ is up 1.18 to 26,780 or 98. Actually, it just flipped over to 26,802. Wow. Dow is up almost 2 full points. God. S&P Mini is up over 2 full points. And then there's Bitcoin. $77,290. That's a $1.55 trillion market cap. We can get 15.9 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 20,016,982.4 of. Average fees per block are normal. There are 35 blocks carrying 64,000 unconfirmed transactions waiting to clear at high priorities of 2 sats per VByte. Lows get you in at 0.8. 996 exahashes per second is what I'm reading as the hash rate of the Bitcoin network. We're damn near back to a zettahash. Mining death spiral has been averted. Okay. From Tethered Drift. Yesterday's episode of Bitcoin and I got Nick Dose with 193 sats says cheers. Pyro Hawk with 100 says Fountain is my favorite too, even if it does have issues. That's it. That's all I got. And I got like one boost from the day before yesterday's episode as well. Why? Well, it turns out that Fountain was getting kind of attacked by a bot that was continuously pinging its API, or using the API to ping Fountain to, I don't know, to either download episodes. Not really exactly sure why this bot was doing it, but what it caused was a sort of a domino effect. Because, like, if you don't know what happened, yesterday's episode and the day before actually did not get up to onto Fountain app or the Fountain podcast player because, or at least it didn't get up until like late yesterday afternoon or early evening. I mean, and it really it screwed my download numbers up pretty bad. And I'm not blaming anybody. I'm surprised any of this shit works in the first place. But what happened was this bot starts kind of attacking Fountain. And Fountain, in turn, their back end uses podcast index as, where is it getting its new podcast episodes from, because that index is really important for a lot of platforms to be able to poll and then pull down new episodes, right? But Fountain was pinging podcast index. It was basically polling it, going, give me your new data, give me your new data, give me your new data. And it backlogged podcast index because there were like 500,000 polling requests queued up to podcast index. And it basically kind of broke podcast index. And because of that, my two episodes, the day before yesterday and yesterday, never got to go up to podcast index. And while my episodes were up on some other platforms didn't get them because they utilize podcast index. So yeah, my numbers got tore to shreds yesterday and the day before yesterday. And also I didn't get hardly got any boost because people couldn't see it. They couldn't see the episodes. And again, not angry. I'm not blaming anybody. I'm surprised this shit works at all. I'm just thankful that the guys from Fountain and even my podcast host, podhome.fm, helped me out on this by making sure that I got a hold of Oscar Mary over at Fountain saying, hey, there's a problem. Can you look into it? And then Dave Jones, which is Adam Curry's partner in Podcast Index, he got on it and he finally discovered what was going on in the back end. And, like I said, I'm surprised it all works at all. But what I'm really surprised about is how everybody came out of the woodwork to help not just me, but anybody else that was affected by this continual pinging by Fountain's API to Podcast Index. But they seemed to get it all cleared up. Hopefully this will be the last bad luck that I have of the 1300 series. And of course I'm talking about the fact that this is episode 1302. I got a lot of 13s to go through before I hit 14. That's the weather report. Welcome to part 2 of the news that you can use where everybody's got a podcast, including the Securities and Exchange Commission. SEC officials push U.S. crypto ambitions in their debut podcast episode, Vismaya V from decrypt.co. The SEC's sweeping regulatory pivot under Chairman Paul Atkins is sending the clearest signal yet that America's top securities regulator has chosen cooperation over confrontation with the crypto industry. But whether words translate into durable policy remains the central question for markets, at least according to experts. In the inaugural episode of Material Matters, Paul Atkins' first official podcast, yes, you heard that here, right. SEC Chair Paul Atkins now has his own podcast. The SEC Chair projected a pro-innovation message. He's saying the U.S. should be the place, quote, where people want to innovate, whether it's in crypto or something else, and hailing a very important inflection point in American markets. The first episode, released on Thursday, featured Commissioners Mark Ueda and Hester Pierce, and was billed by the agency as a window into its 2026 priorities. Quote, in the last 4 years, it was a complete deviation, Ueda said, of the Gensler-era SEC, noting the agency had strayed from its core mandate into areas including DEI oversight, greenhouse gas disclosures, and supply chain management. Quote, we weren't even in the stadium We were outside, he said. Pierce, who leads the agency's crypto task force, now rebranded as Project Crypto, used the platform to lay out her case for innovation first regulation. Quote, we need to have financial regulation that is open to innovators because innovation is what makes the financial markets resilient. Sorry, I'm choking to death. Quote, if we can encourage people to build here, our investors will benefit. Our markets will benefit. End quote. Okay. We need to have financial regulation that is open to innovators because innovation is what makes the financial markets resilient. Have you tried sound money? I'm just asking for a friend, man. But the U.S. SEC under Paul Atkins rolled out a series of crypto policy shifts, including guidance that most crypto assets are not securities, exemptions for DeFi interfaces, and the disclosure or dismissal of cases against crypto firms like Ripple, Coinbase, Binance, and others. Enforcement actions fell 22% in fiscal 2025. Monetary relief dropped to $2.7 billion from $8.2 billion, with the agency saying last week that crypto enforcement in prior years led to misguided expectations. Democratic lawmakers have criticized the SEC's enforcement rollback, with Rep. Stephen Lynch saying at a House Financial Services Committee hearing that the SEC's dismissal of high-profile cases has ended investor trust. Mail Zane, regional manager of crypto exchange CoinEx, said that the shift marks a structural change in how the regulator engages with markets. Quote, Paul Atkins' first speech in his new role signals a shift from a confrontational regulatory model to a systemic and predictable rule architecture. In practical terms, this signals a gradual return to institutional capital, the normalization of listings, and the launch of more complex products from derivatives to new ETFs, Zane told Decrypt. Zane cautioned, however, that the market remains cautious due to the dependence of further steps on legislative initiatives in the United States Congress. Quote, rules come first. You can't build infrastructure on ambiguity, Sergey Kratstov said, or co-founder and CEO of stablecoin payment program protocol Papaya Finance told Decrypt, adding that he is relocating his company to the United States and filing a patent with the United States Patent and Trademark Office on the back of the current administration's posture. Quote, but if the framework takes 2 more years, the infrastructure layer gets built in Singapore, UAE, or even the EU under MiCA. The window where the U.S. can attract the foundational layer is probably only 12 to 18 months, Kratstov said. And he argued that first signs of such a shift would be felt at the infrastructure layer, not in token launches. Clear rules would enable payment companies, neobanks, and fintech platforms to integrate crypto rails without fear of enforcement, compressing timelines from exploring to shipping, he said. So honestly, the real meat here is the fact that Paul Atkins has a podcast. The SEC chairman has a podcast. This reminds me of Fireside Chats, which I never actually really saw. I think that was Teddy Roosevelt, the president, one of the past presidents of the United States, used to have radio addresses, and this is before TV. And they called them Fireside Chats. And it was like sort of like the first time that the American public was able to just listen to what the president had to say. You know, it was like nobody had really done that before. And for a good reason, there really wasn't a way to do it before, you know, certainly not before radio. It's not like you're going to do it with a telegraph machine, right? But it was the first time that we really got to, you know, as a people of the country, to sit down and just listen to the president himself say the things that the president wanted to say, figure out what, you know, we got to figure out what the president thought was important. You know, well, that's really never been done by any agency. And it's kind of shocking. I'm actually surprised to see somebody like the SEC launch a podcast. Honestly, it's kind of brilliant. Now, I haven't listened to it. I don't know if it sucks, but at least they're trying. And somebody is going to be monitoring that. It's not probably going to be me because I only have so many, hours in the day, but somebody's going to be monitoring that thing, and we'll find out if they're worth their salt and they're actually telling us things that we can use or things that we don't care about. But moving on to Charles Schwab. As I've said, they're launching their Bitcoin trading and for retail clients, but they've got a little bit more news, and Micah Zimmerman is going to take us through it, Bitcoin Magazine. Charles Schwab announced further details and further plans in their attempt to launch direct spot Bitcoin trading through its new platform, Schwab Crypto, signaling a major step by one of the country's largest brokerage firms into the digital asset market. The feature will roll out in phases over the coming weeks and will allow retail clients to buy and sell Bitcoin and Ethereum through existing Schwab platforms, the bank said. The move gives millions of Schwab clients the ability to trade Bitcoin alongside traditional holdings such as stocks, ETFs, mutual funds, etc. Clients will access Schwab Crypto through Charles Schwab Premier Bank, SSB, which will act as custodian for the digital assets. And blockchain infrastructure provider Paxos will handle sub-custody and trade execution under a federally regulated trust structure. Quote, clients want to conduct more of their financial lives at Schwab. With Schwab Crypto, they can trade digital assets within their existing accounts while drawing on the service, research, and tools they rely on, said Jonathan Craig, head of retail investing. At launch, Schwab Crypto will enable direct trading in Bitcoin and shitcoin number one, which will together represent 3/4 of global crypto market capitalization. Schwab will charge a transaction fee of 75 basis points on the dollar value of every trade, placing its pricing at the low end of the brokerage industry. And over time, the firm plans to add more cryptocurrencies, of course, and enable transfer capabilities for deposits and withdrawals, because everybody's got to get into the shitcoins. Actually, what they're I'm pausing just to say they're really going to be interested in tokenized equities. I guarantee it, man. Schwab said its platform will integrate digital assets across schwab.com, the Schwab mobile app, and the Think or Swim trading suite. Clients will retain access to Schwab's 24/7 customer service network, digital asset education through Schwab coaching, and research from the Schwab Center for Financial Research. Joe Vitry, head of digital assets at Schwab, described the launch as an extension of the firm's broader digital strategy. Our goal, quote, is to be the destination of choice for retail investors, not institutions. This is guy on the street level stuff, man. The choice for retail investors who want to integrate digital assets into their portfolios with confidence, he said. Paxos, a New York-based blockchain provider overseen by the Office of the Comptroller of the Currency, will supply the infrastructure that underpins the new trading offering. Its custody platform is already used by several global financial institutions seeking regulated access to digital assets. Schwab already holds a strong presence in the digital asset ecosystem, with clients owning roughly 20% of spot crypto exchange-traded products. The new feature expands Schwab's reach beyond indirect crypto exposure through ETFs, mutual funds, and futures tied to cryptocurrency benchmarks. The company's entry into spot trading will position it alongside firms such as Coinbase, Robinhood, and Webull, which have long provided retail access to major digital currencies. It's the retail portion of this that is going to drive this next phase of everything. When Bitcoin was first born, it was only retail that gave a shit. Well, when it was first born, it was only geeks and cyberpunks and nerds and, math guys and, all the crypto guys that were driving everything. But after a while, it was pretty much solely retail until what happened? The institutions came. Remember that? Remember that whole era of Bitcoin where it's like the institutions are coming? Well, the institutions have been here for a while, and it's kind of, but now we're circling back to a much larger swath of retail, because the retail that drove Bitcoin's price before wasn't that all far removed from nerds and crypto guys and cypherpunks. It definitely got into like more of the mainstream retail, but honestly, most people were just like, I don't want to touch it. Like I was telling you about my friend. Have you gotten into Bitcoin yet? He's like, yeah, no, I don't even want to touch that stuff. He's probably going to be looking at it now. If he hasn't looked at it again since I had that discussion with him like 12 years ago, he's the target audience for this round of retail. Because he's the guy that has a Charles Schwab account. He's the guy that has an account at Goldman Sachs. He's the guy that's working with other, financial advisors. So this is the new retail that's coming into the picture. And they're going to be basically driven by a fleet, an armies of financial advisors who now have the go-ahead and safe harbor to say 1% allocation to Bitcoin, 2% allocation to Bitcoin. Some of them might say 5%, but I'm going to keep the number between 1% and 5% for the next year at least before somebody somewhere says you might want to think about 10%. But this is a brand new set of retail. This is the people that have already looked at it once, completely dismissed it on their own, but now they're going to get that second touch, not from their aunt or their uncle or their, brother or their sister or their mom or their dad or their son or their daughter or their friends. That's their first touch, like me talking to my friend saying, have you bought Bitcoin yet? The second touch is going to be from somebody who they think knows, or rather they trust more than me when it comes to these types of matters. He's only going to be 12, 13 years late. And he's still going to be early. Just saying, be prepared. All right, let's get into this one from Atlas 21. Roman Storm, Tornado Cash, Roman Storm acquittal hearing. Government theories are under scrutiny. As reported by The Rage last Thursday, the Southern District of New York heard arguments from both prosecution and defense on the motion for acquittal of Tornado Cash developer Roman Storm. The long-awaited hearing will determine whether Storm faces a new trial and whether his conviction will be overturned. Discussions focus primarily on jurisdiction, specifically whether an overt act of the alleged criminal conspiracy actually took place in the Southern District of New York. Three main issues emerged at the center of the debate: the separation between Tornado Cash's user interface and the protocol itself, whether Tornado Cash actually transferred funds, and whether the protocol was operated with criminal intent. The defense emphasized that payments made to Infura, a widely used hosting service in the Ethereum ecosystem, had been made in cryptocurrency without involving any New York bank accounts, and that Infura was only used to host the UI, which is not essential for accessing the protocol itself. Storm's attorney, Brian Klein, insisted on the distinction between the UI as a neutral access tool to the protocol and the protocol itself. Quote, "It is not a tool specifically designed to facilitate money laundering. Legitimate users could and did use it," end quote. Judge Fila responded that she had already seen the neutral tool arguments, but had not found them reflected in case law. Klein also clarified that the total illicit funds that passed through Tornado Cash during the entire contested period amounted to a maximum of 15% of all transaction volume, asking what threshold of illicit funds would constitute criminal intent. Oh, this is a really good argument. The prosecution, represented by Ben Arad, took positions that on several occasions left the judge puzzled. Arad argued that Tornado Cash was the entity transferring the funds, citing the role of relayers in withdrawal operations, and that Storm controlled, quote, the Tornado Cash protocol as a whole, end quote. He then advanced the theory that all funds in the protocol could be considered illegitimate because they contributed to the operation of the service, even if only a percentage came from criminal activity, and that therefore every improvement made to it constituted a criminal act. Oh my God. The judge responded, quote, I might say you were doing better before you started talking, end quote. Using as an example the fact that Windows continuously improves its features for the benefit of both legitimate and illegitimate users without this constituting a crime. Oh, getting bitch slapped by the judge. I might say you were doing better before you started talking. That is embarrassing. You're talking about a professional prosecutorial attorney just getting his ass handed to him in court. I wonder if he was red-faced. Quote, or rather not quote, a point of strong tension concerned the concept of inaction as a crime. The prosecution then argued that Storm could have avoided criminal liability by shutting down Tornado Cash or withdrawing from the operation once he became aware of criminal use. Klein countered that a cryptocurrency mixer is legal, a position admitted by the prosecution itself, and that the government cannot argue that operating one was inherently illegal. Fila repeatedly pressed the prosecution on exactly when criminal liability would have arisen, receiving the response that, quote, every step taken in furtherance of that service was a criminal act, end quote. The judge stated that she was concerned if the prosecution's theory came down to keeping the business alive knowing it was being used for illicit purposes, and clarified that she might ultimately agree with the defense on the insufficiency of the prosecution's theories while reserving her final decision. Ooh, this could be good for Roman. Judge Fila nonetheless noted that internal communications showed that Storm and his team were aware of potential criminal liability, even if, quote, whether their concerns actually translate into criminal liability may be a different question, end quote. The suggested dates for a possible new trial on the two remaining counts of conspiracy to violate sanctions and conspiracy to commit money laundering are October the 26th, November the 30th, and then in January of 2027. The judge, however, urged the parties not to interpret the hearing as indicative of her final position on the matter. Yeah, I guess so. But dude, you were doing better before you opened your mouth. Holy smokes, man. I don't know. Keep your fingers crossed. Keep your fingers crossed, because at least it looks like this particular judge is having some deeper thoughts about what the hell's going on here. And the whole thought of only 15% of the total transaction volume of Tornado Cash in the area of concern, the dates of concern, like from this date to this date, this is the area of concern, not what's going on, past that date, and not what went on before that, before the start date. No, this little section, right? That's where this case is centered on, is like, here's where we think illegal transactions were occurring. And through that, the entirety of the volume in those dates, only 15% could be and is being considered completely illegal. And the question that the judge asked, or the question that the defense attorney asked, was like, at what point do you consider, at what percentage do you consider the entirety of the protocol being illicit and basically built to perform illegal activity? Is it 5% of total transaction volume? Is it 95%? Is it 15? Is it 50? What's the number? Because at this point, this is a great argument, because it introduces the entire argument of this is arbitrary. And nobody likes arbitrary when it comes to laws. I don't want a law to be insta-rule like drinking games when you were a teenager. I want laws that say if you do X, Y, and Z, then you get A, B, and C as your penalty. But if you do just X and Y and you didn't do Z, then the whole thing falls apart because the rule is X, Y, and Z. Not X, Y, X or Y or Z. Not any combination of any two of those. No, it has to be all three. And if all three are not there, then you do not get penalized by that law. That's what we want. Nobody, there's not a judge or jury in the land that likes arbitrariness. And the introduction that the 15% of total transaction volume is an arbitrary number is going to introduce doubt. And that is a powerful tool for a defense attorney to use. I love this guy. This is going to be great unless it's not, because we've been having some really bad luck with these guys lately, and I just want Roman Storm to go home. And I also want you to go home with your Bitcoin, but not just yet. But the way that you're going to go home with your Bitcoin is stop using Ledger. Do not use Ledger. Don't have anything to do with this stupid company. At this point, this company is so toxic. Well, let me explain why. China. Counterfeit Ledger Nano S Plus is sold on the marketplace. Atlas 21 bringing it home for this week with this one. A Brazilian security researcher who identified himself as Pass Computer 2901 on the Reddit channel Ledger Wallet published on Thursday a detailed analysis of a counterfeit Ledger device purchased on a Chinese marketplace. The device, a Ledger Nano S Plus, was sold at the same price as the official Ledger store and featured apparently authentic packaging. Only after connecting it to the genuine Ledger Live app already installed on his computer did the researcher notice that the device failed Ledger's built-in genuine check. That's in quotes. After dismantling the device, the researcher discovered modified hardware and firmware designed to capture and expose sensitive wallet data, and inside the unit were clear signs of tampering, including scraped chip markings and an embedded Wi-Fi and Bluetooth antenna. According to the researcher, the scam mechanism specifically targets first-time users. The QR code included in the packaging was meant to direct victims to download a malicious version of the Ledger Live app, which would have displayed a fake genuine check showing a successful result. By following the on-screen instructions, users would have ended up handing over their seed phrases to the attackers, allowing them to drain the funds at any time. While analyzing the firmware, the researcher put the chip into boot mode. Initially, the device identified itself as a Nano S Plus 7704 with an associated serial number. At the end of the boot sequence, however, the name of another manufacturer appeared, Espress-If Systems, a publicly listed Chinese semiconductor company headquartered in Shanghai. The incident fits into a broader context of increasingly sophisticated scams targeting users who opt for self-custody. Earlier this month, more than 50 victims were tricked into revealing their seed phrases through a fake Ledger Live app that appeared on Apple's App Store, and I told you all about that one. At this point, there's nothing about Ledger that you can trust. You need to stop using Ledger. I mean, I don't know what else to say. The company themselves has put their users and any future users at such extreme risk by not being vigilant about their data. The fact that they have any data collection at all, the fact that they keep that data and can't clearly secure it. And now, after letter campaigns and email phishing campaigns and all manner of campaigns, now we have a full-blown set of completely fake Ledger devices hitting the market. At this point, the the barracuda and the piranhas and the outside fish of the sea with big, nasty, sharp, pointy teeth are looking at Ledger like a nice, tasty snack. And they're just taking pieces off of these people. And they can, as they do so, they continue to degrade the trust in this company to the point that now there's no way I would ever tell anybody that Ledger even had a hardware wallet. I'm not even going to bring them up unless they're in the news. I'm never going to tell you about Ledger. Everything about this has turned 100% toxic, and it's Ledger's own fault. They allowed themselves to be hacked on at least 2 occasions for massive amounts of customer data, and now it's come back to roost. Again, the chickens have come home, and they're roosting on fake ledgers from China. Do not use this company. If you need a hardware wallet, please, for the love of God, go to CoinKite and get a cold card and use code Bitcoin and. That's the end of the show. That is the end of 1302. Hopefully, I will be able to get this up onto Fountain the way that I normally do. We'll see. But this whole bot thing, one thing that I forgot to mention, we're going to see a lot of this. People are vibe coding bots out the wazoo, and it's going to, this entire situation of a bot pinging Fountain and basically causing Fountain to ping and pull the living shit out of Podcast Index is sort of like a domino effect. And that's just bot to company 1 to company 2. Now, what if Podcast Index had a dependency or some kind of dependency on a third company? And those polling requests caused Podcast Index to reach out to another company and do another set of polls. Well, now you'd have 3 companies involved. This is a microcosm of what's coming, because I can almost guarantee that the bot in question was probably vibe coded with AI. And there was some legacy code in Fountain's code base that they didn't think that was being used anymore. And this bot was able to look at, or I guess maybe they found it. I don't know how they did it. I still love the guys at Fountain. I'm never going to leave them as my daily driver for Podcasting 2.0 app. But everybody's got to be careful now, because at this point, what if somebody was able to look inside of Fountain and say, here's something that we can use. They vibe code a bot around it. Next thing you know, the bot starts pinging this part of the legacy code that causes the whole other stuff to happen, to the point that I cannot get not 1, but 2 shows to not upload to Fountain. And I got a lot of people going, why is it are you not cutting shows this week? And I'm like, yeah, I am. I just can't get it to Fountain. And Fountain ends up being like the majority percentage of all listeners that I have come out of Fountain. And it's no wonder I promote Fountain like a son of a bitch. Every time I do drop a show on X or Nostr or whatever, I'm always including the Fountain link. I don't include the Apple Podcast link. I include a Fountain link. Always. I've been doing that ever since I started using Fountain. I mean, I've been doing it for years, so it's no wonder. But man, that really, really hurt my download numbers. And I actually saw it get reflected on keyword searches on another analysis application that I use for my podcast. I saw a massive dip in the way that my podcast episodes interact with the podcast ecosphere, connecting through keywords, because it's like all, search engine optimization. Think of it that way. But my keywords got hammered. Everything got blown to bits with this one bot. So just think about that for everything else. Think about, again, Linux, free and open source software, free and open source protocols. I mean, it's not that that's going to fix the bot issue, but the legacy system is so intrinsically tied to each other, that you pull on one string and the next thing you know, you're affecting, it's like at this point, there's more chance of a tsunami occurring because of a butterfly flapping its wings digitally than there is on the actual face of meat space planet Earth. I pull on one string in the digital realm and all of a sudden they all fall down. So understand that we may be entering a phase in the modern internet where a lot of it may actually appear to be broken. And if you wonder why, I mean, I've been seeing all kinds of like small problems, things that I can't really lay my finger on, but have made me go, wait a minute, this looks different, or this has taken a different amount of time, or something that just kind of triggers something in my head going, this isn't acting exactly the way it always acts. I suspect that there are going to be millions, if not possibly billions, of bots running around, and it's going to plug up the work. So I don't know how to work around that other than free and open source software, free and open source protocols, Linux operating systems, things that, free and open source routers, like from Start9, use code Bitcoin and, even though they're not an advertiser. I don't see any other way out of it. And again, I will admit that doesn't fix the bot issue itself, but I do get the feeling like it's sort of like, remember how nobody ever wrote any viruses for Apple operating systems for a long, long time? And it was because the majority of the world was using Windows, so that's where all the people were writing viruses for. I think of it as sort of the same thing. Everybody is like still on this legacy internet stuff and not really looking to exploit free and open source software and not really looking to exploit free and open source protocols because everybody's on Twitter and therefore you want to screw up Twitter, that kind of thing. So just, if you're not on Nostr, if you're not really looking into free and open source software, please look at it. And Krita, Krita, that's the name of the other free and open source digital painting software like Photoshop. Krita, my son found it, and honestly, it's pretty damn impressive. I like it a hell of a lot better than GIMP. I will give it that. So if you're looking for a free and open source software to replace Photoshop, or you just want to find something that might replace Photoshop, Krita, Krita, Krita. It's rock solid, and I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.